Hello, and welcome to Donatien Investment. This analysis is for Ero Copper on the Toronto Stock Exchange as of 7th of August 2026 with a share price of 43 Canadian dollars 62. The full report is on Donatien.ca, site a cheap low-cost copper producer, a hold on the short horizon and a strong buy on the medium and long term. The stock is overbought after a 17% run, so it is a hold now, but at approximately 6.6 times forward earnings and approximately 0.9 times net asset value. With copper in a structural squeeze, accumulate on a pullback into 38 Canadian dollars to 40 Canadian dollars. ERO just posted a record second quarter, revenue of $284 million, up 74% on the year, taking trailing revenue to about $1 billion. It earns a 31% return on equity, and its cash cost of $2.42 a pound sits at less than half the copper price near $5, so every pound mined throws off a wide margin. The story is the Tucuma mine, which has just ramped into production and roughly doubles group revenue, turning Ero from a one-mine story into a multi-asset producer. The offset is that it is concentrated in a single country, Brazil, and building costs keep free cash flow thin today. On valuation, Ero still screens cheap. It trades at about 6.6 times forward earnings and 0.9 times its net asset value, well below the roughly 15 times line typical for a miner, so the Tucuma earnings ramp is barely priced in. 16 analysts carry a consensus target of $49.44 with a high of 58, and two-thirds rate it a buy. The honest caveat is that the 17% run since late July has done some of the work. Upside to the consensus has compressed from about a third to roughly 13%. It is still attractive, just no longer a screaming bargain. Timing is why the short call is a hold rather than a buy. The trend has turned decisively up. All 5 timeframes are aligned bullish and the Q2 beat drove a clean breakout. But the move is stretched. The hourly relative strength index is at 76, deep in overbought territory, and the stock sits 3% below resistance at 45.20. Underneath it, copper is in a genuine structural squeeze. Prices are up 12% off the June low and above a rising average, driven by a supply deficit and demand from electrification and AI data centers. That squeeze is what makes the medium and long term a strong buy, but the clean entry is a pullback into the 38 to 40 retest, not a chase into resistance. The risks are loud and worth stating plainly. First, the tape. After a 17% run, the stock is overbought and just under resistance, so a mean reversion pullback of 8 to 12% toward the 38 to 40 retest is a real near-term path, and a hot US inflation print on the 12th of August could trigger it. Second, and bigger, the whole case is geared to copper. If the metal rolls over on a global growth or China demand scare, the bear case is $33, a fall of about 24%, and Ero's high beta of 1.58 would amplify it. On top of that, sit single country Brazil risk, a cash cost that ticked up, and free cash flow that is thin while the company builds. A copper price sustained below about $3.80 a pound would break the thesis outright. Now weigh the risk against the reward. The bull case is roughly 38% above today, the base case, the most likely, about 15%, and the bear case a fall of about 24%, so you are risking about 24 to make 38. So, I'll call on Ero Copper on the Toronto Stock Exchange, hold, accumulate on a pullback. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at Donatien.ca. The link to the full report is in the notes below. Have a great day.